Jatin Shah is saying, Dean, most of the times I find difficult to get clear directional bias. Can you point to what I can do to improve? Otherwise, I am always indecisive on selecting strategy. You do not have a problem with finding directional bias. You are still looking for direction. Okay, I'll tell you. Can you tell me what is the directional bias right now? What is the directional bias right now? I want it in a higher time frame and a short swing time frame. Up, down, sideways are the options. Robertson is saying down in short swing time frame. Jatin is saying it's range bound, so it will touch bottom range. Swami is saying without breaking last point of supply, so still up. Prajwal is saying up in short swing time frame. So you guys now can tell me what do you think is the directional bias in higher time frame. Trivan is saying up on short swing time frame and sideways on higher time frame. Okay, Robertson is saying up in higher time frame. Rajiv is saying on higher time frame directional bias is up, on shorter time frame it is sideways. Prajwal is saying higher time frame sideways move can continue. Abhay is saying higher time frame is up and short swing time frame is looking for shorting market. Alright, so let us examine what the actual situation is. The question is very simple. What is the directional bias? It does not ask first and foremost what markets will do. Alright, we are not asking this question. My question is what is the directional bias? Simple. Some of you, let us discuss about higher time frame, are saying that it is up in higher time frame. Fine. How do you determine the directional bias? Directional bias is determined by looking at last points of demand and last points of supply. We have already established over the last few sessions that there is no last point of supply as such here. There is no area of struggle from where the market went down. We have already gone above every one of those. The last one was here. Now, when you look at the last point of demand, this is the last point of demand. Below it, this is the last point of demand. Then this one. So we have these three last points of demand. This is the latest one. We are comfortably above it. The directional bias is up. Simple. You do not have to question. Don't think what the market is trying to do, what it will do, whether they are trying to short, whether they are trying to buy. No. Simple. Directional bias is up. Why? Because last point of demand is still in force. Did we go below that and accept? No. So this is still in force. Twice it has defended it. It is still in force. Directional bias is up. That is the higher time frame. Simple. So higher time frame directional bias is up. We are not looking for short rates in the short term. Why? Because if you take short rates in the short term and the directional bias is up in the higher time frame, that higher time frame directional bias can come and screw with your shorter term trades any time and it will completely destroy it. Example, see here. Now here we see some rejection, market starts to go up, forms the HVN or point of control here and then another composite HVN here. Markets are moving higher, value is moving higher. As we are moving higher in the very short term, these are the last points of demand. So this is a double distribution trending and this is our last point of supply. Now we did not cross above this last point of supply. I am talking about these 2 days. We did not cross above last point of supply. So the directional bias has not turned up, but we are forming last points of demand. We are going higher. As long as we stay below this last point of supply, the directional bias is still down. But as we start forming higher value areas, we see some definite commitment by buyers. This fact that we haven't crossed last point of supply and we have higher value areas tells us that both buyers and sellers are in balance. They are fighting with each other. That makes the directional bias sideways. Then what happens? Market goes lower. It goes lower, it breaks below these last points of demand. So on this day, the directional bias on shorter time frame is down. But where is it? It is right at the HVN or last point of demand in higher time frame. Is it a safe place to short? No. Why? Because this can destroy your short positions. See market destroying your short positions. Why this sharp trend day occurred? Anyone who shorted here, anyone who shorted here, they were all taken for a ride because you were going against higher time frame last point of demand. In the short term, the directional bias was down. Definitely. Why? Because we broke below last point of demand. That makes it down. We haven't yet broken above the last point of supply, so it keeps it down. Makes sense? But the higher time frame is still up, and that is what caused this rapid move up and it destroyed the seller's short positions. Now, if I ask you what is the directional bias today, now you have to look at where are the last points of supply. One was here, these 2 days, then we went lower, then we went back up, we repaired it here, it is done, so that is no longer valid. The next one is here, we repaired that also, that is no longer valid, that is done. Now we have this visual reference, it's not a supply or demand zone, it's a visual reference, and we are finding it difficult to go above that. Obviously it's a visual reference, selling will come, it's a shorter term selling, we need not worry too much about it yet. So there are no last points of supply on the shorter time frame chart right now in this consolidation. On the shorter term chart, whatever last points of supply were there, were repaired already. We are clearly forming higher value area today. Now it is clear that we are forming value and it is forming higher. So we need not worry about the directional bias. It is clearly up in the short time frame and it is clearly up in the longer time frame. So what are you going to do with that? You are going to take a long trade. What is the trade we have right now? We have a long trade. Why did we take that long trade? Did we manage to break this last point of supply when we took the trade? No. But why did we take that trade? We took that trade based on 2 factors. One, the higher time frame last point of demand is strong and it's defending. And in the short term, we have what? This cognitive dissonance development, where it seems that market is struggling, there is a lot of overlap, but we are consistently one time framing and extending the range, and that resulted in this sharp breakout, and it took out this last point of supply, this last point of supply. When it took out the second one, I rolled a position up. Is it so difficult to think about decision making in this way? It is not difficult, but is it easy? No, it is not easy either. Why? Because when I am explaining things might look very, very easy to you. Oh, this is so simple. Oh, this is so simple. But when you go to a chart, it looks like everything is disturbed, everything is jumbled up, and you cannot make a decision. That is expected. Don't think that you are not able to figure the markets out because you cannot make a decision in the markets. You will become good at it, you will become better at it, you will find it becoming easier and easier as you move forward. Just keep analyzing the markets based on some very, very fundamental logical principles like the directional bias, like the last points of supply and demand, like the trade facilitation and all those kinds of things. Yeah, and I just wanted to go through these replies, and I just wanted to give some people suggestion, like Jatin is saying shorter time frame, I believe it is range bound, so it will touch bottom range. You are trying to get ahead of the markets. Why would it touch the bottom range? Just because it is at the top of the range. At the top of the range, it is expected that short status quo time frame will come in and try and defend the top of the range, but that does not mean that we are going to go to the bottom of the range. So be careful. You are getting ahead of the markets. Swami is saying without breaking last point of supply, so still up. I think you are confusing last point of supply and demand. Last point of supply are responsible for or they are considered as resistances. So as you keep breaking those, the uptrend will be confirmed. Prajwal says up in short swing time frame. Yes, you are correct. Triveni is saying up on short swing time frame and sideways on higher time frame. Triveni short swing time frame up, you are correct, but it is not sideways in time frame. Price is moving sideways does not make directional bias sideways. Makes sense. Then Robertson is saying up in higher time frame, correct. Rajiv is saying up in higher time frame and shorter time frame sideways. So yeah, there is a range on the shorter time frame, and but the fact that we have taken out this last point of supply, now there is no last point of supply, just a visual reference. I think it is still up on shorter time frames. Prajwal is saying higher time frame sideways move can continue. Again, we do not have to predict the markets. No one is paying us for predicting the markets. Alright, so whether it continues to move sideways or not, it is market's decision. What we have to do, that we have to find out. Alright. Abhay is saying higher time frame is up and short swing time frame is looking for shorting market. Again, you are trying to understand what the traders are trying to do, whether they are trying to short or whether they are trying to buy. What market is showing us now here, obviously shorter terms are selling. Why I am saying that? Because market is not breaking up. Yeah, some supply is expected, it's a visual reference, selling will come in, and what it will do, it will push the market sideways. It is a confirmation that it is happening. Then we come to the effects of that selling, where we able to find acceptance below VWAP. When below VWAP we are trying to recover, so if we continue to move higher, this will just be a test below VWAP and that won't be considered as acceptance below VWAP. But like if we just keep moving sideways, then it will be considered as acceptance at or below VWAP. Alright. So Triveni is saying, sir, but I was considering higher time frame traders keeping the monthly range in place. Range maintenance is done by 3 different time frames, right? Status quo time frame, discovery time frame, and exhaustion time frame, right? Now here what happens, if you are looking at this chart, this big, extremely big range, this is being maintained by status quo time frame, but this has been going on for almost a year or more now. The discovery time frame on this particular 1 year long consolidation is much higher. We are not trading that in any ways because that is investor time frame. So when you go to this chart, you can see that the smaller consolidation, okay, this small consolidation, that is better observed on a shorter time frame chart. Okay, so here you will see that on a shorter time frame chart also status quo time frame are selling, and looking at this long term reference, higher time frames are also selling, those are also status quo time frame. So one is trying to maintain this range, one time frame is trying to maintain this range. If we break out from here, there are multiple discovery time frames at work. One will be which is greater than this status quo time frame, one will be which is greater than this status quo time frame. Make sense? This and this may not be equal, because if we break out, this discovery time frame is successful, but this breakout can fail. In that case, this discovery time frame did not find success, because we have the extreme range top is at this level. We can go and we can fail in this zone, and that still will be considered as status quo time frame getting the better of discovery time frame. So that is how you have to look at it.